It's been a remarkable couple of days for the SPY, for the Nasdaq 100. You have the S&P 500 rallying 3%. You have the Nasdaq 100 rallying 5%. It's quite remarkable, and it's really changed the entire outlook for the market going forward as it's broken through some major resistance that we've been talking about over the past couple of months. In fact, this resistance goes all the way back to the beginning of January of last year for the S&P 500 and back to the end of December of 2021 for the Nasdaq 100. So it's a big deal what's going on right now with the markets, because these decline trend lines have broken, and it changes the whole landscape. It really takes the ball out of the court of the bears that's really had control of this market for the entire past year, and now it takes it and puts it in the bulls' hands. So can the bulls take the ball and run with it? That's what we're going to have to see in the coming days and weeks. But let's jump right into the charts here and see what I'm talking about. First of all, you guys remember this one, right? I mean, we've been talking about this declining trend line for pretty much 5, 6, 7 months. I don't know. It's been a while though, and you've got this break here. So when I zoom in, today's move, yes, it wasn't as strong as it was early on, but it still is a break above that declining trend line. And so that's the trend line that has guided this market lower over the past year. And now all of a sudden we're trading above it. And so there's a couple of things that's happened that's been very interesting to me. So you have this rising trend line off of the lows. So it's not like we just put in a new low and we just took right off to the races. We tested the trend line here. This was back in December, and we pulled back. And this was one of the things that had me the most worried, especially when we tested it last week and we sold off. I still was a little bit concerned because we had essentially created a higher low. And that's when you don't retest the lows and break through them. Instead, we stopped well short of taking out those October lows. And instead, we formed a higher low. And now we're breaking through. And if we can break these highs from December, then you have a higher high and essentially a new long-term trend line that's being put into place. Now, does that mean that we still couldn't see a retest of October? Absolutely. It means that we could still see that. And I would expect at some point this year, we're going to see another major sell-off. But for the time being, bulls really had the ball in their hands. And I'll tell you, going back to Friday, I was short going into Friday. That move surprised me. It was pretty big shocker there, especially the amount that it lasted for, and then to get that follow through today. Technical analysis, and I preach this all the time, it's not about technical analysis conforming to what we believe it will happen. It's about us asking ourselves, okay, now that we see what has happened, how are we going to react to it? What is the technical analysis telling us? And at this point, if we're going to stay true to technical analysis, you got a declining trend line, and it's broken through here today. You take some resistance that might be coming into play and down the road. You have some pretty significant challenges still for this market, but it's not in the here and now. You're talking about 417, 418, where this resistance will start kicking in. Maybe you could even take it up to about 420, where it's really going to be a real test for this market going forward. And this is resistance that goes back to June of 2021. So this is pretty significant. This is really, this level of support back in 2022 is really what jump-started some of the heavy selling that we saw from May to October, where we made those lows. Now, we're breaking through 400. We could see another 5% move that takes us all the way up to 420. So that's the SPY. Let's look at the Qs. On the Qs, you have another declining trend line, and that got broken today. What's impressive about this is that we broke both of these trend lines on the same day, and the Qs had a lot more work to do, but with it rallying 5% against the SPY's 3%, it was able to make up some of that ground. It still hasn't broken the 200-day moving average. I'm not so sure how much resistance that's going to create. You can see back in March of last year, we had a little bit of a shindig here with the 200-day moving average, and then we also had it again back in February of last year, where it did create some problems for price. So not completely out of the woods yet, but breaking through this declining trend line is a big deal. Now, if you go back, this is kind of what makes things a little bit interesting, but it didn't have near as many tests at the time. You had this trend line back in last year, and we got just above it for a little bit before we ultimately sold off again. So keep that in the back of your mind too. And the reason why I keep bringing you these what-if scenarios or possible, okay, everything looks good, but keep an eye out for that, is because the market can always surprise us. Just like it surprised me Friday. I'm 100% cash now, so that completely had to. It forced me to have to look at the market from a different angle there. And what you also have is this potential double bottom pattern that's brewing. Now, it's not a very clean breakout level because you got these 3 points right here going back from November and December where we did push above them intraday, but we couldn't hold the close above them into the close. So this double bottom pattern is in play as well. So I think there's a lot of things to be interested in with this market, to be talking about. I think there is the potential for this market to make a substantial run here early in the new year. If it does that, let's say it rallies up until June. Does that mean that the market still can't struggle at some point this year? Yeah, you could definitely see that struggle come back, especially if we do go into that recession. We start seeing that contraction in earnings for a lot of your companies, and the layoffs start to take hold and take their hit on the market. Right now, earnings is a kind of a good stock catalyst to the upside. CEOs are cutting because they know it'll help their stock price. Whether or not they really need to cut, they probably do. There's a lot of largesse in corporate America right now. They got all those cookie trays and brownie trays in the meetings and everything else. They need to get those out of there if they're really getting serious about cutting back on costs. But, you know, I think there's a lot of things that you're going to see in the short term here where they'll be trying to boost their share price just like they did last year with stock splits, like what we saw with Google and Amazon. You're going to see the same thing again here, but perhaps with layoffs this time around. So keep your eye out on that. Also, I want to show you the T2108. This one chart here, pretty interesting to me because we're getting stretched to the upside, 72% to the upside. So a lot of your strength over the last couple of days has been in discretionary and technology. You got like discretionary up 12%, you got technology up 10%. So there's not going to be a lot of real good plays there. You're probably going to have to go back and look at industrials. You're probably going to have to look at some of your healthcare stocks, some utility plays. If things start to get a little bit more uncertain, the utility plays could come into action there. But your discretionary and tech plays, they've made huge runs. Like Amazon, it's up like 18%. Those are hard to really capitalize at this stage of the game, especially when they're up 18% literally 20 days into the new year. So year to date, 18%. Anyways, if you enjoyed this video, make sure to check out the join button down below. You can become part of my YouTube membership that you're going to get a lot more videos just like this each and every day. I do a couple of them each day for the members, as well as trade ideas and updates on the market, on big tech, and a whole bunch of watch lists. Check that out. I think you'll like it, and it helps support this channel as well. Let me know down in the comments below, what do you make of this, us breaking this decline in trend line? Does that change everything for you here? Does that change how you trade going forward? Or are you just holding out on the short positions? Or have you been long the whole time? I want to hear all about it, man. All right, guys, take care and God bless.